$1,500 compared to a year ago, and year-to-date it is up $88,000. Insurance refunds in the Employee Benefit Fund were up $17,877 as compared to this time last year. This is due to the timing of the receipt of the audited workers' compensation premium. Miscellaneous revenue for the general fund was up $59,000, due in large part to the timing of the ball field maintenance reimbursement received each year from HRC. However, it is also due to the sale of several vehicles at auction that had reached their end of service life. Those proceeds totaled $20,576,000. Court fines for public safety revenues are up $9,440. And year-to-date residential and business water consumption is down a -5%. However, water and conservation revenue are up a total of 7%. And also the sewer revenue is up 30% year-to-date. Some notable areas of revenue decrease. Miscellaneous revenue for the public safety equipment fell $7,100 due to the receipt of a credit at this time last year on a large equipment purchase for PD. And miscellaneous revenue for the Bickel-Schmidt Sports Complex was off $16,000 due simply to the timing of receipts on one of the pledges for the complex. Expenditures in April totaled $1,776,000. That's a decrease of $44,000. One notable area of increase, the headline here for increased expenditures for April was a third payroll. Therefore, all funds saw an increase in that line. One extra payroll amounts to a total of about $373,000. And some notable areas of decreased expenditures: electricity for buildings and grounds fell to $28,700. Fleet maintenance continues to fall. That's down $14,000. Golf and parks and playgrounds chemical expenditures were down $29,500. Some of that was the timing of purchasing of chemicals department-wide. And golf course improvement expenditures were off $10,600 as compared to last year. That was a result of concrete purchase for cart path replacement this time last year. Month-to-date general fund sales tax collections were at $513,838. That's another decrease, down $37,947 as compared to last year. Year-to-date general fund collections are $2,348,375. That's down $129,000 or a -5.2% as compared to the same time last year. The negative sales trend is through 8 months of the last 10. General fund collections are down $221,796 during that same time frame. The reported quarter-to-date sales tax collections by industry classification was down $21,443 or a -1.18%. That top 10 represents 71.4% of the total quarter-to-date sales tax distribution. And the Finance City Clerk's Office invested $3.5 million in maturing or renewing certificates with a weighted average interest rate of 0.62%. The portfolio of certificates of deposit on April 30 totaled $55.4 million with a weighted average interest rate of 0.47. I will note that is up 25 basis points from a year ago. And the total balance of the money market account on April 30 was $1 million with a current yield of 0.2. Total investments are now up $500,000 when compared to this time last year.
Mr. Chairman, I move we approve the financial statement as presented.
Second.
Motion and second. Is there any questions of Mr. Rowe?
No, just an observation. In today's Lawrence Journal World, it notes that of the top 10 sales tax collectors in the state, Lawrence, Overland Park, Olathe, Topeka, Johnson County, Sedgwick County, Manhattan, Kansas City, Kansas are all up. The biggest gain is Lawrence, 4.8%, Overland Park and Olathe over 3%. The only two that have gone down, and Hayes, Salina is down 3.3%, and Lenex is down 8%. So it's pretty clear that the impact on the oil economy and agriculture is having a dramatic effect on our economy. And of course we knew that, but it certainly stands out from the rest of the state.
Sure is.
Question? Kim, on the front page, on your third bullet there, miscellaneous revenue for general fund. What, just to reiterate what that last figure is?
I'm sorry,
sold
where are you?
Several vehicles at auction that had reached their end of service life, and which proceeds totaled?
$20,576.
Okay. As opposed to $20 million.
I think, yeah, you
Is
said
that what I
20
said?
million. Yeah.
Did I really?
Yeah,
that's
that's where
right.
I was coming
Oh my gosh.
from. Whoa. I thought maybe you sold the Rolls Royce.
You wouldn't get that much for it.
I was wondering how many vehicles we had that I didn't know about. See, that would be right ahead of Lewis Chrysler. And,
Yeah.
I'm just curious, Kim. I know that this goes back to 2012, and in 2013 it looks like there was a slight decrease year to year, but when's the last time we saw this kind of a trend year over year? Was it 2008, 2009?
No.
It was after,
Yeah, it was between
9
like
and 10.
9, 10, in between 9 and 10. And then we didn't have the multiple months that we've had.
Correct.
It was maybe
was
2
more
or
just-
3, and then we'd bounce back.
Yeah, it was very cyclical.
And I will tell you that, and I'll just wrote the report today, but May historically, as we've always rebounded, I think we showed you a graphic a meeting or so ago about that, and it true to form, it did rebound. It did come back a little, not a lot, but
Yeah.
so maybe we're back.
That was the next thing I was going to ask, is the 6-month running average on page 9 that you started adding. It looks like, I mean, I don't know, when you're talking about that small, but it went from 5.03 to 4.87, so it looked like maybe possibly we've turned
Yeah,
the
might be a good
corner.
trend.
Following.
Maybe we're bottoming out.
we
Might be a
hope.
good trend.
Hope.
No further questions? Call for the vote. All in favor, approving the financial statement, please say aye.
Aye.
Opposed, nay. Motion carried 5-0. Next on the agenda is citizen comments. If there is any member of the audience who would like to address the commission on non-agenda items, please come forward. State your name for the record. Seeing none, we'll move on to the consent agenda. Commissioners, I have on that consent agenda, we do have the Santa Maria Paraguay Honorary Street designation resolution. That was a great event that we had last week. And then I have some appointments here, Don Benjamin, Lyle Nordick to the Airport Advisory, and also Sharon Honeyman to the Golf Course Advisory.
I move we approve the consent agenda as presented.
Second.
A motion and a second to approve the consent agenda. All those in favor say aye.
Aye.
Those opposed say nay. That motion carries 5-0. Currently, there is no unfinished business. We'll move on to new business, and that will be the 2015 audit report. And the chair recognizes Melissa Romey and Mr. Ken Barron of Adams, Brown, Barron, and Ball for that audit report.
Good evening. We'd like to start on page 1 and 2, which is the independent auditor's report. And there's a couple new items that were added into your audit this year, and so I just want to make sure that you're aware of what they are. We've talked about them in the past coming up, but there was a new item, and it's got a really fancy name. It's GASB 68. And so basically that deals with the pension plan. And the pension plan that every a pension plan?
Abstention plan, is that what you're
Pension
saying?
plan.
No, pension,
Okay, everybody be quiet. Please say it again.
pension.
Okay, thank you.
So it's a CAPERS, which is your Kansas public Sorry about that. Yes.
Fine.
So basically, what the AICPA said, and along with the Government Auditing Standards Board, is that we understand that it's a cost-sharing entity, meaning that you share in it. It's not solely your plan. You're not obligated to make up the remaining balance if you have one of a net pension liability. But they said, you know what, we believe that it needs to be on your financial statements. So if you issue a generally accepted accounting principles financial statement, you need to put it on there. And so that is something that you'll see reflected in here. The numbers are not ours. They were done by CAPERS. Their independent auditors came up with it. The GASB 68 report is published on their website, and if you want to see what each and every municipality would owe in net pension liability as of June 30th of 2015, it is published out there. And so there's measurement dates that they go through, which is December 31st of 2014, and so that had to be incorporated into your financial statements this year. In conjunction with that, on page 2 of the report, we talk about some opinions. And just to let you know, the governmental activities has an unmodified opinion, meaning that overall your financial statements and your business type financial statements, overall they are reflected accurately, correctly, and include everything. However, we have the aggregate discretely presented component unit would be qualified because we do not include the housing authority. The Hayes Housing Authority is not included in your financial statements. And then in the general fund, it's qualified because even though we went to the Affordable Health Care Plan, everyone had to go to that this year, that's just based upon your age. It's not based upon what your cost of health insurance premiums are, not based upon your health conditions. It's based upon your age. So if you're a healthy 20-year-old, you pay the same amount as a unhealthy, critically ill 20-year-old. And so they still consider that as subsidized health insurance, and therefore you would need to look at what your health insurance and what you're subsidizing. And so there's another calculation that your actuarials would have to do, and you'd have to put that on your financial statements. Well, once that number goes onto your financial statements, there really is never any way to get it off, and so you reflect what you would owe in the future, even though at the end of the day, the City of Hayes does not pay. If you terminate employment or leave employment, you as the City of Hayes are not paying their health insurance premiums. That calculation is still on your financial statements. And so you have elected not to report that. But I just have to tell the readers that that's not on there, and that's what that qualified opinion's telling them.
Melissa, will the
Yes.
accounting profession ever catch up with a law that was passed 6 years ago? Because this isn't going to change.
I
Well,
realize that.
No, just it was I think, semi-rhetorical.
Okay. Yeah. But I wanted you to know that everything else is unmodified along because you've reported everything else within the financial statements as you should.
Why was water and sewer qualified, though?
Because water and sewer also would have some health insurance premiums that they are paying.
Okay.
So again, I wanted you to know. If the rest of the report, though, when it comes down to it, are all the numbers actually in the report that you need to make a financial decision? Yes, they are. Okay? So, with that being said, pages 5 through page 10 is the management's discussion and analysis. And that is something that is written by Toby, and he signed it. And so if you have any questions when you're reading it, then if you would ask him, that'd be great.
Ask away.
So I'm going to ask you to turn to page 11, which is your statement of net position. When we look at it, I want to concentrate on the second and third, the second and third column from the right-hand side of the page, which are the 2015 and the 2014 columns. And as you look through here, a couple of things that you might want to take a look at is your overall cash. And that's the first line item. It increased by $450,000. So as a commission, this includes everything. This includes your depreciation. This also includes that GASB 68 adjustment we had talked about. So it's everything within there. Any liabilities that you owe, any accounts receivable that you're going to collect, it's all reflected in these in this statement right here. If you look down, capital assets, net of depreciation, you're going to see that if you ran the calculator, it went up by about $9 million. And those were due to, you put in a bike trail last year of about $3.6 million. You had the 13th Street reconstruction, which was around $2 million. You had the terminal building, which was completed during 2015 of $1.6 million. And then you had some various street repairs, 12th Street, and that came up to about $1.3 million. And so that's the majority of what your assets increased. So again, you were busy maintaining your streets and adding to the value and keeping them in a good condition, which underneath GASB 6034, underneath the reporting model that you have said and promised to keep the streets at good to fair condition. And so you did go ahead and you did that this year. The very last item on that page, the third column from the right-hand side, is something we call a deferred outflow, meaning that you're not going to have to pay that out in the next 12 months, but it's called deferred outflow pension. And that's a number of $602,093. And again, that number is calculated by CAPERS and is given to us to include in your audit report. And it's an asset for you. Okay? Going over to page 2 of this statement of net position, just a couple of items. I want you to look third column from the right-hand side. It's about halfway down the page. It's an isolated number, and it's $8,693,292. And that's the net pension liability. If everybody quit work today and you had to pay everything out, that is what they've calculated that your obligation would have been. CAPER's obligation really is.
It's not your obligation, it's
You-
CAPER's obligation,
Right.
but we have to include it on your financials.
That's right.
sense.
And so sometimes the question comes up, how do you guys pay in to retire that? Well, each year, that's why you're getting an adjusted rate from CAPERS. I think this past year it was 10.81%. And so 2016, they readjusted that rate. And so as you pay in, that they invest the money and hopefully it grows.
When we do a GASB third, I just spent Monday and Tuesday at the annual Kansas Society of CPAs governmental and not-for-profit conference, and this idea was talked about greatly, because if you do a KMAG report, which does not include all your assets, this only shows up as a footnote, where since we do a GASB 34 report for you, it has to show up with a liability, and so municipalities are facing a balance sheet that is greatly affected from the one that we reported the previous year, and you're showing some liabilities on there, like Melissa indicated, that are really not your liabilities in the long term, but we have to include it in your report.
Going ahead, I'll have you flip over to the next page, and this is your composition of net position. And so if you look at your net investment in assets, it went up by to $103 million from $90 million. And again, you had the assets that you added in. You also were retiring debt, so that number right there should grow. If you take on more debt for street projects or for funding of assets, then that would obviously decrease until that debt's paid off. But so that means that you're adding assets, but you're also decreasing your overall obligations. The budget stabilization fund that you have set aside money in, it's not been touched in the last couple years, which is a great thing for you. So you do have some flexibility if you would need it. The other is capital projects. You still have a balance of $1,676,000. Debt service money that was set aside to begin the budget year was $187,525. And then capital improvements, which is your capital reserve set aside in the water and sewer fund, and that's $1,986,000 for you. Your unrestricted, or what you could go out and use, which includes your streets and everything, is at $34 million.
So the budget stabilization, is that like when we buy the mill levy down, or what is it?
That was the original 3/4% sales tax that went into effect the first year that was collected.
There was a
It was
period.
set aside.
Yeah, it's a savings account, rainy day
Rainy
fund.
day fund.
Mhm.
There was a period of time, Sean, from the time that the original sales tax, I was more closely involved with it, then you actually collected sales tax after the election for a period of time during that year, where the general fund was also still being financed by general property revenues.
Oh.
And the city at that time made that election and put that money aside for a subsequent need. And so you've had it in there and have
Yeah.
not touched it since the sales tax went into effect, which I can't remember what year that was.
2005, 2006.
Yep.
The
Okay.
comprehensive financial management policy also dictates that if we ever dip into that we have a year or 24-month period, we have to
Oh,
replenish
really?
that.
Okay.
Oh, yes.
Thank you.
There is a small, and I don't know what the number is, but it's in that budget stabilization of the pool reserve money.
Oh, yeah.
Was rolled into that. So when the pool was paid for by a sales tax, and there was a little bit left over afterwards, and then by law, if it isn't spent within 10 years, it rolls into the general fund. The commission wanted to keep it in reserve for capital projects, the pool, And so they put it into budget stabilization, so we keep a separate accounting of that.
Okay.
And then if we ever do have capital expenditure needs, the pool will pay for it out of that.
That's good stuff.
Who recommended that?
I think there's
City
commission and
Management
staff.
Commission at that time, that's what we voted on. That was the purpose, since we had both funding sources in play at the same time.
Yeah, given the volatility of the sales tax, it's a good call at the time to be able to set up that reserve.
So the sales tax revenue started in 2005? How did it report?
Oh, I don't recall. It was
It was
2004 or
somewhere-
5,
Okay.
but it
It
ran
was-
simultaneously with the property tax continued.
The vote was in 2004, the tax went into effect in 2005, and that
Right.
year they were collecting both,
Okay.
if I recall.
If you flip over to the next page, this is your statement of activities. I'm not going to go through all the numbers here, but I do want to point out on the previous page, I want to show you what your net position, how it changed. And so I'm going to have you go down, third column from the right-hand side of the page, about a third of the way from the bottom. And then it says change in net position, and it's at $10,967,381. That's the revenue, that's what you started the year off with in these assets that you were able to add into like your fund balance or your retained earnings if you were a business. And then your net position at the beginning of the year, including all business type activities plus your governmental activities, was $144,010. Due to the implementation of that net pension liability, we had to reduce your net pension or position by $9,377,506. And so you'll notice that the liability on your balance sheet this year was at $8 million. Last year was at $9 million, so it did decrease from one year to the next. And so that brought your beginning net of the year position down to $134,633, and then you add the $10 million into it. It left you at the end of the year, that final line, with $145 million. I'm going to have you guys flip over to page 19. If you have a specific question, please ask me. Otherwise, I'm just going to hit some of the highlights here and some of the changes that we had discussed with the city manager before we presented tonight. In the second column from the right-hand side, you'll see cash, and this right here is your water and sewer, solid waste, and stormwater management. You'll note that the overall cash did decrease from $3 million down to $2.6 million, which is about $400,000 decrease. But the sales tax that you're collecting and setting aside in the reserve fund increased by $1.1 million. And looking down through the rest of it, your assets stayed about the same overall. Depreciation increased a little bit, which we would expect on your assets. At the end of the year, then, your total assets were at $54,640,000. I'm going to go ahead and take you over to the next page then and show you your liabilities. Your overall liabilities, if second column in, about a third of the way from the bottom of that page, your overall total liabilities were at $4 million last year. This year they're $3.7 million, and again that's due to paying off the revenue bond that is in these funds, in the water and sewer fund to be precise. If you look, you'll also see then your investment in net assets increased from 16.5 up to 19 million. And encumbrances had decreased because, again, you've been retiring those, didn't have as many to encumber. Going forward, your capital improvements, or the capital improvement reserve fund we talked about earlier, is reported in these funds, and it's 1.9 million. Your unrestricted then went from 31 million down to 29 million, but part of that then is reallocated back up to net investments because you paid down some debt.
One thing you probably want to notice, we don't really pay any wages out of the water and sewer fund. You transfer that money into the general fund and all wages are paid out of that. So we're not picking up any of that pension liability as a liability in the water and sewer fund, which, if you were going out for water and sewer bonds at some time in the future, would have a negative effect on your bond rating for those water and sewer bonds. So the way you're doing it is probably a benefit to you in the long run.
That's interesting.
Going over to the next page, this right here is your statement of revenues, expenses, and changes in fund balance. If you look, your total operating revenues, which is a third of the way down, increased by $300,000 to $7.3 million at the end of 2015. You were also able to, with the depreciation and other operations and having the stormwater management had increased by about $237,000. So that's the increase you're going to see in total operating expenses in this line item. Your net operating income, if you look at your proprietary funds, increased from $2.6 million up to $2.7 million. And so as you look at your compliance on your revenue bond, it means that you met your compliance requirement on that. Looking through, you've got some non-operating revenues in here. You have the sales tax that we had talked about, interest income, R9 Ranch. You also pay out the interest expense, the R9 Ranch expenses, and then some costs for water exploration. So at the end of 2015, your net non-operating revenues exceeded your expenditures, and it was $1.7 million. You have some transfers in, and then the transfers out, as Ken had indicated. I'm going to have you flip back a few more pages to about page 44. These are the notes to the financial statements, and there's a lot of information in there. And so as you read over it, if you have any questions, please give us a call. We'd be happy to go over anything within it. There is one thing, though, that I did want to call to your attention. It's Note 11, and it's the stewardship, compliance, and accountability. And when we came in and had done the audit, we confirmed your pledged securities, and we did find out that at the end of the year, that the bank did not have a security in place. And so we contacted the bank, we did visit with them, they did agree it was not in place, but as soon as they had figured out that they did not have it in place, they went out and put it in place as of January 5th of 2016. And so we do need to note that it wasn't in place, but immediately they went out and secured it for you.
Is this like a bond that they, what kind of security is this?
It's a pledged security on your deposits.
Right.
And so you do not have something called a peak depository period, so you keep your funds 100% insured.
Right.
And so what happened is that you had a small amount of your funds that had the bank closed on that point, at that point in time, you would have been at risk on those.
For the new board members, FDIC coverage covers you to a certain limit. Kansas statutes requires banks to pledge their assets to cover your accounts in excess of the FDIC coverage. And basically what happened is they didn't have some of their assets pledged, like Melissa indicated, for a period of time. And it's their responsibility. We have to cite you for it, but it's their responsibility when you give them that money and you invest it with them, that they provide you coverage to cover that excess.
Do they provide proof of that to us in some way?
Yeah.
Okay.
Mm-hmm. Now I want to take you back to go over just one more fund real briefly, and it's on page 52. This is the general fund. And what we look at, and when we look at it, we looked at your fund balance. Your cash obviously increased by $600,000, but when we look at the composite of the fund balance, we want to see what you thought you should have set aside for next year's budget to operate to start the year, and see if you actually met that and if you had any funds in excess of that. That's kind of the health of your general fund, and because you're dependent upon sales tax, it is important to take a look at that. And so the first line item you'll see about a third of the way from the bottom of the page is that budget stabilization. You'll notice it's at $3.2 million. Stayed the same as last year, as I previously had noted. You have reserved for encumbrances or funds that you had set aside for future obligations. Those were $200,000. What we really look at is designated for subsequent years' expenditures. When you had done the 2016 budget, you had anticipated or needed $3,043,962 in order to start the year for you to be able to make your budget without decreasing any expenditures along the way. So you had said we would have that. You had that amount of money plus an additional $785,697. Okay? The one thing that if you looked at these just by looking at the unassigned balance from the $785,000 this year to the 1.1 last year, at first if you looked at it straight across, you would think you had a decrease in your unencumbered cash balance, but that's not true because you actually obligated an additional $900,000 that you needed to start this year's budget with. Last year, to start the 2015 budget, you only needed $2,142,000. So you have to look at those two numbers together, and your unencumbered cash balance in the general fund went up by $557,000.
So the unassigned, is that from us, I guess, savings on what we projected on?
That's correct. By decreasing your expenditures and taking in a little bit more in revenue than what you had budgeted, you could call it your savings. That's your cushion going into your 2017 budget as you set down to start working on it.
Sean, I always talk about when I do budgets, when you're really doing the 2006, Melissa laughs because she's heard this so many times, but when you're really doing the 16 budget, you've got to look at where your revenues are going to be, because you've got to be prepared to do that 2017 budget. So that means that basically you have $785,000 to start. You received only what you get in budgeted in 2016. You spent everything you budgeted in 16. Going into 17, you'd have another $785,000. So you'd have to make up the difference between that $785,000 and that $3 million, and that's what you hope you do by having excess revenues in 2016 over what was budgeted, or that your expenditures in 16 will not be to the level that what you budgeted in 16.
Oh, thank you for that explanation. Appreciate that.
And eventually, when the commission transfers money to the capital reserve, then to pay cash for projects, this is predominantly where that comes from.
Great. It's good to see.
I wasn't going to spend any more time on the general fund unless you had any questions. The one other item I did want to call your attention to on the audit report was back on page 87. This right here is your schedule of findings and question cost. So you had what's now called a uniform grant audit. It's no longer called an OMB 133 audit, so the terminology had changed. And so you wouldn't have to have a single audit unless you expended $750,000 or more during the year 2015. And you did. You actually expended $884,000, which the majority of that was done within the airport fund. And so when the government looks at it, what they're going to look at is they're going to see what type of audit report you had. Overall, you had a couple items that were qualified, so they know it's qualified, which is fine with them. They're really looking at your internal control over your financial statements, and they're looking at your internal control over your federal awards, at which you had no findings.
You know, the federal government relies on us as auditors to review to make sure that you're abiding by the requirements of those grants, and that you're spending the money what it's for, that your contractors are paying the prevailing wage rate. We go through a significant amount of time on the audit just reviewing those particular deals to make sure that you're in compliance with that, because they can then come back and audit our records to make sure that we were assuring that you were in compliance with that.
There was a danger that Dave Traber, that advises the governor, wanted to go in and take funds from school districts oftentimes that money was from a bond, you know, set in stone, what it was to be spent for, and somebody had to remind him that you can't, that's just not money sitting there. It's,
No.
they're waiting, they maybe have bids out for a new roof or you know, whatever the case may be. And so it's a pretty dodgy area to go in there and mess around because it does get audited pretty closely.
Does anyone have any questions on the audit report?
Mr. Chairman, I move we approve the audit presented by Adams, Brown, Barron, and Ball, submitted on June 9th, 2016, for the year ended December 31st, 2015.
Second.
Have a motion and second on acceptance of the audit report as submitted by Adams, Brown, Barron, and Ball. Just backing up here a second, if I may ask a question. You know, we have the page, I think it was on 52, where we have our expenditures and so forth for the general fund. And we pay, our general fund is funded by the sales tax. Where's that figure at?
Page 54, please.
Oh, 54. Okay, so that's all the revenue generated by sales tax
For the general fund.
for the general fund, yes. ma'am.
Yes.
Okay. I guess
Not
we
for
wrote
water.
52, I should have paged ahead a couple of times.
Wanted to make sure we were on the same page.
Yeah.
Okay. Does anybody have any further questions or
I do.
comments?
It's a
Yes.
hypothetical, so you don't have to answer it. Let's say that there was a federal grant available to put in a water line or tear down a building for municipalities. And let's say that a business wanted to apply for that federal grant and use the money. Even though it's a federal grant for municipalities, they say, we'll take care of it, we'll fill out all the paperwork. How would that, because I see this airport thing, what if we applied for, say, a community development block grant on behalf of a business? Would that be a bit of a problem, even though it's not intended for use by the business, but by the municipality? And you can ponder that, but that's something we're kind of running into right
Yeah.
now.
Good question.
You have to look at what the federal rules are on it.
Okay?
There are some grants that are federal grants that commercial businesses can apply for and can administer. But if you write the grants and you're actually the sponsoring entity,
Right.
you are responsible for whatever they do.
Which is what?
There are some smaller municipalities, though, in this region that are doing this,
That's correct.
and they're doing it quite heavily. So I would ask the city manager and the finance director, if you have time, and of course this is probably on top of the fees we pay for the audit, to look at this, because I'd like to have, given what we've seen here, we wouldn't have any control over the way that private business spent federal money. I would be very concerned about that.
Did you read an article on this or know of an example? I'm curious because
Yes, there is a developer that would like to build some facilities and has asked us to apply multiple times for federal money
Yeah.
to assist them. But they say, don't worry about it, they will fill out, they'll be personally liable, they'll do all the paperwork and they'll do the follow-up. But since it's not designated for use by private entities, but for public entities, for public good, that gets us into a gray area, particularly when we get audited.
Yeah.
We would probably have a qualified opinion, which I don't want.
No,
Well, therein lies a cautionary thing for municipalities that are sometimes, or any entity that's kind of a pass-through, and you got to apparently read, well, you do have to read all the fine print and everything, so I think that's what you're alluding to. And it's interesting you bring that, because I just had to listen to a discussion just on what you're talking about right there. So tread with caution as if we are, somebody comes through us again.
There are some pass-through grants that you can get, like Melissa says, you're going to be responsible to answer those, and you have to hold their feet to the fire.
Right.
Yeah, and this one isn't designed to be a pass-through. This is,
Isn't it?
the city would be,
Oh, really?
the city would be the applicant, the city would be responsible.
Correct.
It's just that
Right.
They would
the
fill
the
it all
entity
out.
wanting to use it is claiming they would do the administration, take the paperwork. But how much are we just gonna trust them to do it when we're the one responsible?
Right.
Exactly.
Actually, the residents of Hayes
Right.
are on the hook.
Right.
Right.
Yeah.
And that includes prevailing wages, that includes the way the dollars are spent.
Right.
So my contention had been, you know, the city commission is going to be involved in every expenditure and every bid, every quote for, again, a private entity. So it's taking up a lot of public time for a private entity.
I would check with some of your sister cities that are about the same size and see whether anybody else is even doing that.
Mhm.
Well, and to your
Senator,
question, there is cities using it, but it just,
But they're not ours.
they're not our
They're not
size.
small, they're cities of the third class, they're under 5,000.
Right,
Yeah,
right.
it'd be interesting to know.
Thank you.
As usual, outstanding job.
Thank you.
This is my second one this year because you did the audit for the library board. But once again, clear and concise.
Yeah.
And great presentation. I appreciate that. Hopefully the folks at home learn a little bit also about our budget. Yes, sir.
I wanted to just comment, obviously, we're very happy with this board. It's clean, and it takes all staff to make this happen, and I just want to give kudos to my right arms, Lori Hurdle and Rachel Albin. They are the finance arm within the clerk's office, and without them, things like this wouldn't be possible. But it also takes the entire staff there, because we have to watch every penny every day. We have to balance the thousands of transactions that go through, and they are good about coming in and saying, hey, this doesn't look right, or hey, should we really be doing this? And so I appreciate that I have a great staff that actually makes this happen.
Just one more comment. We had the discussion here about the rainy day fund. To show you how things can change over years. When I first went in the legislature, we used to not leave the Capitol until we had a balanced budget, and I believe a 7.2% ending balance, which later on became a rainy day fund. And anytime somebody wanted to use money for that, my God, another 3 hours in the House chamber debating why you couldn't take $50,000 out of that. And so over time, that the law was changed and they reduced the amount and all that, and it's unfortunate because they could obviously use that right now. We do have a motion and a second on the floor. All those in favor of that motion, please say aye. Or did we vote already?
No, we've not. We're ready for you.
All in favor, say aye.
Aye.
Opposed, nay. Motion does carry 5-0.
Heber, you weren't in the legislature when they didn't have enough money to pay the schools. So when we do school audits now, we pick up the money as revenue, but the state doesn't actually pay them till in July. And so the state doesn't have enough money to fund the schools at June 30th.
And
it shows up on the school districts as revenue.
It's all backwards too, because as they're trying to get their budget ratified in August and start a school and everything, it's kind of difficult when you're waiting there until God knows when in July to find out whether anybody's going to get their job and get paid. Thanks very much.
Thank you very much. We do appreciate all the help that the city employees do give us when we're up here. We come in with a set agenda, and we have a lot of questions to go through. They do take the time and effort to set aside their day for us, and we do appreciate that. That allows us to get the report done a lot quicker. Thank you.
Thank you guys.
Thank you.
Report of the city manager.
Two quick things to report. One, the departments sent budgets to me quite a while back. I've been reviewing budgets. We had budget meetings. The budget is to the point now where it will be congealed over the next 2 weeks. We're ready to receive our assessed evaluation, hopefully July 1, and you will get your budget workbook shortly after that. The budget will be formally laid out to you, I believe, at the second work session in July, but you'll get your budget workbooks before that. The budget you're going to receive is, despite the negative sales tax trends, I wanted to give kudos to the departments. They did a good job of towing the line this year, finding ways to cut. The budget you're going to receive is it's at 25 mills, as per your direction. It's balanced. It sets money aside in reserves. There is not a cut in operations. There's not a cut in personnel. We're still budgeting to spend over $1 million on street maintenance and fund major street projects, as well as the water and sewer projects that are ongoing. So I think you'll be pleased with the budget we give you. Second thing is there was a very long meeting held today at the Welcome Center with regard to the wastewater design build project. CDM Smith, the city's design builder, they had submitted the 90% drawings that have been reviewed by HDR, the city's owners, rep, city staff. There was a very lengthy meeting today. I don't know, might even still be going on. They were still going on about 6 o'clock. with the intent of, at the meeting and then following up the rest of this week and part of next, is finalizing that 90% design. The 90% design will be finalized, it's anticipated early next week. At that time, CDM will bid various parts of the work that they won't self-perform. So some of the equipment, some of the concrete, a lot of the subcontractor work, they're going to go out and bid this. In early July, we're going to meet in Lee's Summit and go over the bid package to come up with a guaranteed maximum price. And then in July, we're coming back to you guys with a recommendation for Phase 2 contract and a guaranteed maximum price. So we're working towards the schedule. I'm just giving you a heads up that we're getting close to coming back to you guys with the recommendation Phase 2 and the guaranteed maximum price. So things are progressing, and hopefully we can get that approved, and then that's when the shovels can start turning out there and we can move forward.
Do you feel like we're still on pace? What we did?
Absolutely.
Great.
Just curious, why are you meeting in Lee's Summit instead of here?
Lee's Summit is where our owner's rep is at, and at that meeting, we're probably going to have, I would say, 24 engineers and people that are in the Kansas City area, so it's cheaper for 2 of us to drive to Lee's Summit rather than to bring all them out here.
I was just thinking of bed tax.
Yeah, and it's 2 days. It's 2 days of meetings. It's a Monday and Tuesday's worth of meetings. So it's for the project standpoint, it's cheaper to take us out there than it is for
You
them
have
to
to
come
pay
here.
for it, so.
Yeah, it's coming out of the bottom line.
You okay with that?
I'm good with that.
Mr. Schwaller?
No, thank you, nothing.
Mr. Meyer? No. Mr. Weasel? I was just going to, more for the folks at home, we had visitors from our sister city, Santa Maria, Paraguay, and we did, at the beginning of this meeting, approved a design resolution for kind of an honorary naming of 13th Street, so I think this was supposed to go back with them as a memento, but we're going to keep it.
Ship it.
All right. With that, this meeting is adjourned.
Have you watched the Paraguay? Anthony Bourdain?